speaker is Dr. Terry Rickard, Director of Quantitative Research and a board member of Till Capital Limited. He's going to talk to us about Fuzzification as a career principle.
Well, I too want to express my appreciation to Shanaz for putting together this symposium, and I want to talk to you today about my own personal experiences with Lotfi and how he has influenced my career, going back really to the early 1970s. About 10 years ago, at the NAFIPS conference at Rockefeller University in New York, Lotfi gave a plenary speech, and he walked up to a whiteboard and he drew a great big T on the board, and he came back to the podium and he made this statement: if T is a theory, then T can be fuzzified. And I had not realized until I heard him say that, that had been kind of a guiding principle for my career, based on my very fortuitous meeting with Lotfi as a graduate student in the early 70s back in UC San Diego when he came down to do a graduate seminar. So I'd like to briefly review, just in one slide, my career experiences that have involved applications of fuzzy logic. As I mentioned, I first met Lotfi as a grad student, and I was stunned by his description of fuzzy logic. I was a probabilist, and my dissertation work was in random processes, and this kind of opened up a whole new window into the world for me. After graduating, I was involved in founding a company where we did mostly research and development work for the Defense Department and the intelligence agencies, and in particular, we developed automated sonar processing systems. If you remember the old movie, The Hunt for Red October, you remember they had a sonar man named Jonesy there who was able to listen and ferret out particular sounds of other submarines. Well, we built systems basically that could listen 360 degrees and do what Jonesy was doing, and those systems involved a lot of fuzzy logic. After about 20 years with Orincon, I left and decided to go into the financial industry, and I partnered with a guy who was the inventor of electronic trading systems. In fact, he did the first electronic trade ever executed back in 1968. And we were, when I first joined him, he was trying to figure out a way to solve a particular problem of matching up buyers and sellers in a little more general way than was possible at the time. And so we developed a system called OptiMark, and I'm going to have a little more to say about that one, so I'll skip lightly through that at this point. I had a brief hiatus, about 4.5 years, with Lockheed Martin, doing ocean surveillance applications. Can't talk too much about that, but trust me, that involved a lot of fuzzy logic. And since 2014, I've been the CEO and the Director of Quantitative Research for Till Capital. And we do evaluation of companies where there is no fundamental data. You know, how do you evaluate a company that has no revenue, so there's none of the things that would normally be used to prescribe a fair value for that company and to compare it with others. So we've developed an extensive hierarchical tree type evaluation structure for doing that, and also developed a robot trading system, which is running today. It wakes itself up every morning, trades futures throughout the day, and then shuts down at the close and waits for the next day, and it's doing quite well. And then most recently, I've been the chief data scientist for a startup company called Meraglim, and we're doing predictive analytics for global macroeconomic domains, where you're trying to forecast things that would be of interest to a sovereign wealth fund or a very large hedge fund, people that are managing tens to hundreds of billions of dollars worth of wealth. And I'll talk a little bit about that. Let me talk about the OptiMark system now. As I said, the problem we were trying to solve there was how do you match up buyers and sellers of all different trading interests, that particularly ones that are interested in trading in large size. We call them institutional investors or institutional traders. The current approach, and unfortunately at the time, and unfortunately it's still now, is that if you have a large order for, say, 10 million shares to buy of IBM, you break that up into many, many small orders, and you dribble them into the market. And you do that because you want to avoid alerting other traders that you're a very large buyer. And basically, if you don't take care to conceal your intentions, you'll get a very large adverse price movement because you'll telegraph your presence in the market, and then people will start trading ahead of you. So the solution to that, after we put our heads together, was I decided that the concept of a limit order, which is basically saying I'm willing to buy or sell at a particular price and for a particular amount, was too narrow. And so we generalized that to create what we called an OptiMark profile. And then we had a matching engine that would determine how different OptiMark profiles would match up. That's a picture of an OptiMark profile for an institutional size buyer. Along the bottom, the x-axis, you see the size, and the vertical axis is price, and the color code there indicates your degree of preference or satisfaction to trade at that price or size. So effectively, this profile is saying that I am willing to pay more if I can get larger size done, and the white would be I'm fully satisfied to trade at those prices and sizes, but then I have declining satisfaction down to 0 in the black area to trade at the lower prices and sizes. And basically, the OptiMark system used profiles of this sort to express buying and selling interest. There was a matching engine that would go with it, and I'll just use this as an illustration. If you had one large buyer characterized by the profile on the right, and you had an aggregation of a lot of small sellers characterized in aggregate by this profile on the left, the system would determine a trade price that would trade the maximum volume with the maximum preference or satisfaction for both the buyer and seller. So this would be your trade price. He indicated he was perfectly willing to pay up in order to get that large size done, and if he traded at this price, then all of these sellers here would get that same price, and he would have a large trade. Nobody would know, because they could not see that profile, that he was willing to pay up that amount in order to get that size of a trade done. Give you a little bit of history on OptiMark. We raised over $350 million in venture capital to build this system. We operated it as a facility of the Pacific Exchange, which was an independent exchange at that time. And NASDAQ approached us and wanted to incorporate it in their trading systems, which we did. And also the Osaka Securities Exchange in Japan approached us. And so we actually built it and operated it as part of all of those exchanges. And we were poised to be taken public in 1999 by Goldman Sachs at about a $2 billion IPO market valuation. Unfortunately, some of our investors felt that if we held out for another year, we could get $10 billion as the IPO. That subsequent year, though, the system was kind of sabotaged by the New York Stock Exchange and the SEC. One thing we had not counted on was the naked political power that the New York Stock Exchange could wield, and indeed they did it. They persuaded the SEC to revoke an approval that they had given us to operate as a part of the national market system, and as a result, we were starved of any liquidity, and the system had to be shut down in 2001. Key point behind this, though, think about it. This was a system that was designed based on fuzzy principles, and we were able to raise over $350 million to build it and operate it from people who had no idea what fuzzy logic was all about. The other system I want to talk about is one that lies now in the future, which I hope will prove a greater long-term success, and that's the Meraglim Raven system. The problem there is that we need a way to do predictive analytics for these global macroeconomic events like a Fed interest rate policy, or war with North Korea, or a Chinese financial crisis. The current approach basically is to use humans to forecast these events. Perhaps the best synopsis excuse me, of how it's done currently is described in a book called Super Forecasting, The Art and Science of Prediction by Philip Tetlock and Dan Gardner. If you have not read that book, it's fairly recent, and I encourage you to read it. It's really quite an interesting book. Not very technical, but he describes the characteristics of people who can do a good job of forecasting events. The drawback, of course, is that there's a vast amount of textual information that comes out every day and broadcast information. So humans are fundamentally incapable of digesting all of that. And they also lack any models that address two very important criteria. One is the fact that concepts involve feedback. So you have a lot of mutual influences, causal influences amongst concepts. And the other characteristic is that a lot of global macroeconomic systems involve critical phenomena in the complexity science sense, where if things reach a certain stage, they can go very nonlinear. So we've developed an approach to modeling this using fuzzy cognitive maps, which are derived from expert narratives. And they, all the states and the connection strengths in these maps are described using words modeled by interval type 2 fuzzy set membership functions. Excuse me. And it's augmented by using IBM's Watson machine to do natural language processing and to provide word inputs into the fuzzy cognitive map. Here's an illustration of a fuzzy cognitive map for predicting whether the US will do a first strike on North Korea, or North Korea will institute a reunification war. And I put this up just as an illustration of the kind of models that we are building there with Meraglim. So what are the plans for Meraglim? Well, we just concluded a $13 million capital raise for the company. We'll be doing full-scale development over this coming year. We hope by 2020 to have 20 to 30 major institutional investors. Thank you, Shanaz. There we go, thanks. And perhaps an acquisition by 2022. So what have I learned from a lesson, or what lessons have I learned from a career in fuzziness? First off is that fuzziness is appealing to non-technical experts. It makes sense to them. They like they like posing solutions to their problems in terms of fuzzy systems. You can get investment funding for any practical application of this. I would estimate that over the course of my career, I've probably been involved in projects that had over $400 million in total sponsorship that involved fuzzy logic. Generally, a hybrid approach that combines human expertise with the fuzzy system works the best. And I'd like to close by saying thank you to Lotfi, who inspired me with that statement: if T is a theory, then T can be fuzzified. So, any questions?
Thank you very much. So, nobody else has a question?
I have a question.
Yes.
Does your analysis for the current startup include cryptocurrency?
It could. We've not built a fuzzy cognitive map for cryptocurrencies yet, but there's obviously a lot of forecasting that needs to be done in that area, whether it will succeed or not. We're focused more on, the problem with cryptocurrencies right now is not a problem, but the fact is that they represent kind of a tiny piece of the total equity universe. I think the total value of Bitcoin now is maybe in a couple of $100 billion at maximum, whereas you compare that with tens of trillions of other equities or securities. Excuse me. I'm recovering from a cold, so my voice is not very strong. Any other questions?
Oh, yeah. My question is, I like your third approach, hybrid approach.
Yes.
And you need experts. Where do you hire experts? And what data you are using? It must be a big data. So you need to have a very powerful computing platform. What kind of computing platform are you using?
Well, you don't need a real powerful computing platform to do the fuzzy cognitive maps. The experts providing those would be people who are typically recognized authors who create narratives periodically describing a particular situation in the world.
You have access to them, yeah.
And so you need access to them. There are also, you can hire subject matter experts in almost any category. Excuse me, there are companies that will maintain a large staff of people like that on call. So that's where we get them.
Okay, thank you.
I'm glad she asked, the young lady that asked a question about the willingness of these companies to fund research work in the area. But do they know, the people that you talked about, do they know that the technology behind the solution paradigm is fuzzy sets?
Oh yeah, yeah. I openly describe the technology behind it, and like in the case of Meraglim, we describe it as fuzzy cognitive maps. Now they're not your father's fuzzy cognitive maps. They're all word-based rather than just singleton values, and they involve a lot of different aggregation functions and neurons, for the nodal activations and so forth. So they're not just straightforward, singleton type fuzzy cognitive maps like you'd read about in the textbook, but they are fuzzy cognitive maps.
Any other question? All right, thank you very much. We appreciate it.
Okay, thanks.